Basic of cost management concepts. This is what we will be discussing in today's video perhaps. So it is a system framework, a system set with interrelated parts that perform one or more processes to accomplish a single objective. That is what a system framework is all about. It. We are the example is an air conditioning system for a home. Probably it is the complete home that has been air conditioned. What is air conditioned? It might be regulating the temperature. It need not be increasing it. It need not be decreasing it. It's just the word called regulating, so that one feels comfortable in its own skin. So operational model for an air conditioner system, let me tell it to you. The cooling process, it is inputs of freon, the chemical that actually cools warm air through electricity. Output is cooled air. Delivery process inputs cool air, electricity ducts thereby. So an output is delivered cool air. So you have an input system in your room, in your house, and there an exit system outside your home, probably where it is the extinguisher. The fan is pulling out the air out, the hot air from your home, and pushing in the cool air through the freon system, if I may say so. So the accounting information system is something like similar to it. It is a system consisting of interrelated manual computer parts using processes such as collecting, recording, summarizing, analyzing, and managing data to provide information. To provide information to the users. Like any system, an accounting information system has four things: the objective, the interrelated, the process, and the outputs. So we are talking about the four accounting information system. Again, objective, interrelated parts, interrelated parts, processes, and output, as the case might be. So operational model, how do we go for the accounting information system? You have an economic event, you have any sort of transaction. Those are the data that you need to put in. Probably after those data have been put in, you need to collect all the data, classify them, summarize them, analyze them, manage them. What are we doing it? We are just basically sorting, sequencing, and prioritizing everything. This comes under the process part. Finally comes your reports, your financial statement, your budgets, your performance report, and the official communication as how the business is functioning. What am I talking about? We are talking about outputs. This goes to the final users. The users will utilize it for their understanding, benefit, and probably come back to the input as far as the next project, next failures. These are feedback that needs to be ascertained. So AIS is the financial accounting information system, is accounting information subsystem that is primarily concerned with producing output for external users thereby. The cost management information system is accounting information subsystem that is primarily concerned with producing outputs for internal users using inputs and process needed to satisfy management objectives thereby, and that is what we should be going for it. The cost management system, I am talking about the information system, has three broad objectives that provide information for the costing out of the services, the costing out of the product, the costing of about the other interest to management, anything. It can be just protection, security to the inventory. Everything involves cost, planning and controlling, and decision making thereby. An integrated cost management system should be designed and developed system, should have a production system, should have a customer service system, and a marketing distribution system. Everything, remember, everything entails cost. The design and development of the system, the production of the system, the customer servicing system, the marketing distribution system. Please don't read it through a cost management point of view. It's a business operational view. How do you design the business, develop the business, the structures of the organization, the production system as in manufacturing, the customer service system as in the supply chain, how does it end the end customer, and the marketing distribution, why should the end customer motivated to purchase your product. This is what an integrated cost management system is all about. It the subsystem of accounting information system. Accounting information system, we're talking about financial accounting information system there above. We're talking about cost management information system, and in those cost management system, the cost accounting information system and operational control system is the crux of it. This is what the subsystem of accounting information system will be stating. The basic of cost concept. Cost is the cash or cash equivalent value sacrificed for goods and services that are expected to bring current or future benefit to the organization. Cost are incurred to produce future benefits. Remember, very thing you are investing right now, you are spending right now for a future income, future benefit. Expired costs are called expenses that you have already done out. Unexpired costs are classified as an assets and probably appear on your balance sheet. Assets is where you are supposed to do a cost, but probably it belongs on your head as of now. It belongs to you. Assign cost accurately to the cost detail is absolutely vital and crucial. The A cost objective is any item such as product, customer department, project, activities, and so on, for which costs are measured, for which costs are assigned. Example, a bicycle is a cost object. When you determine the cost to produce a bicycle. An activity is a basic unit of work being performed in an organization. Setting up the equipment, moving materials, maintaining equipment, anything that to do with it. We are talking about designing products and so on and so forth. Traceability. This is the footprint that we are looking to ascertain. We need to understand traceability is the ability to design, or should I say, assign a cost to every cost object in an economically feasible way by means of causal relationship. Direct cost to the cost that can be easily be accurate and traced to a cost objective. Example, the salary of a supervisor of a department where the department is defined as a cost object. So indirect costs are those costs that cannot be traced easily or accurately to a cost object. That's indirect. Remember, a direct cost where you are assigning everything. Let's say a salary already stated. Indirect cost would be, let's say, the electricity burned for a person to work around it, work in the shop floor. So that's an indirect cost to the production, right? Example, the cost of heating and cooling a plant that manufactures 5 products. So, cost assignment methods, how do we go out it? We have a direct cost, we have a driver tracing, resource drivers, and the allocation there about it. So these are my cost resources. What are my direct tracing is where the expenses have been made, where why the drivers need to why these expenses were required and what was allocated in the first places. So we have a physical observation, we have an activity driver, why the reasons is, and convenience assumed as in the budgeted for allocation. So this is my cost objective all together. So value chain productions, what are we looking into it? We are talking about R&D, research and development, production, marketing, customer services. What are this? This is the operations of an company. Then probably we'll take about the pricing decision, the product mix decision, the strategic profitability per se. Then we let us come into the operating product cost. What are we looking at? We are talking about production, marketing, and customer services. Nothing beyond it. Is the strategic design decision, tactical profitability analysis. Then comes the traditional product cost, as in production only. So manufacturing cost, what do we go around it? It's a direct material are those materials that are directly traceable to the goods, to the services being produced. Example, the cost of a wood and a furniture, definitely yes. The example, the gas, the cost of the gas in producing your electricity, perhaps that's the way you want to go around it. Direct labor is a labor that is directly traceable to the goods and services being produced. Example, wages of assembly line worker, direct cost. Overhead Overheads are all other manufacturing costs. Example, the depreciation of the plant equipments, utility, property taxes, indirect material, direct labor, and so on and so forth. Now, what are we looking as a non-production cost? Marketing and selling is a non-production cost. Definitely, it incurs some cost for to entice the customer to be your to purchase your for him to purchase your product altogether. Example, advertising, storage, and fleet out. Then we have the admin cost or administration cost. What are they? These are costs associated with research and development, keeping a track of every channel administration in the organization. That cannot be reasonably assigned to either of the marketing or the production. Did I say security that is required for maintaining your inventory? That's the thing. Did I say cleaning of the house, cleaning of the production facilities? Probably you need to keep everything spick and span so that everything works smoothly, but then it is not directly affecting the production. Indirectly it is. If you're not keeping the things clean, probably the production decreases, your efficiency decreases to a lot extent. Then we have the non-production cost. For example, the financial reporting, marketing, administrative cost of non-inventory. They are referred to as period cost per. So we have spoken about the production cost. Production cost is nothing but the direct material cost, the direct labor cost, and the overhead cost. Remember, the direct material cost is the prime cost, whereas the direct labor and overhead cost is the conversion cost. This in total becomes the manufacturing cost altogether. Let me give you the non-production or operating cost thereby. One is your administration cost. The second one is your marketing cost. Marketing expenses is all about order getting, ordering cost, order filling, and so on and so forth. Next would be your admin cost, perhaps, and that is what we are trying to go about it. So let me wind up this particular videos with an example. Let's say in December 2031, it's a proxy example. We have a sale of $2,800,000. This is the sale that we goes around it, of which $1,300,000 is just the cost of the good. So what are my gross margins? $700,000. Yes, this is understood. If not, please pause the video and watch it repeatedly. Less the operating expenses. What is my operating expenses? Maybe the selling cost is $300,000 and admin expenses of $150,000. So this means it becomes a summation would be $450,000 minus my gross margin. How do I get my operating income? This is my 250,000 is my operating income from the cost of the goods sold. Schedule is what we are trying to do around here. For the ended something on December 31st, now we have a billing material of $200,000, right? At purchases of $450,000. Then we have something, the total material available is $650,000. Beginning inventory 200 plus $450,000 is $650,000. Ending inventory, the residual inventory after the production process is $50,000. So direct material cost is 650 minus $50,000 would be $600,000. Direct labor cost would be $350,000. This is the summation that you need to add upon it. What is my manufacturing indirect cost? They are indirect labors, depreciations, rent, utilities, property taxes, maintenance. In total, it becomes 450,000. So 450,000 plus 350,000 is approximately 8,000, 800,000. 800,000 plus 600,000 is my 1400,000. This is my total manufacturing cost as on the cost management report that goes around it. We need to continue it, right? So total manufacturing cost is $1,400,000. Beginning of the work, it was 200,000. That's the inventory that was kept with us. Ending work in progress, less the work in progress is $400,000. And then we have the cost of goods that has been manufactured is $1,200. $1,200,000. This is what the cost of good manufacturing is all about it. This is nothing but the work in progress. WIP consists of the partially completed units found in the production at any given point of time. So the cost of the goods sold for the year to the 2023 December, cost of the good manufacturers is $1,200,000. Definitely, yes. Beginning inventory was $250,000. In totality, we have an inventory of $1,450,000. Ending inventory is approximately $150,000. The cost of the good remains $1,300,000. This is my cost of the goods sold. So from the statement of the goods manufactured, and that is what needs to be understood. Here is what I wanted to find it out. Thank you for watching the video till the end.